Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. This segment is brought to you by realcrowd.com. For crowdfunding for commercial real estate, you got to check them out. Well, today we're talking about Integra's Viewpoint 2018 with Anthony Graziano, chairman with Integra Realty Resources. And this is a report, we'll have a link below, that is a great look at what might happen in the commercial real estate world and economy moving forward. And Anthony, I want to ask you about hotels, the hospitality market, because we all like to stay in nice hotels. Are businesses going to have more money? Are we going to travel more? Are consumers going to have more money from the Tax Act? What does all this mean for hospitality moving forward?
Sure. So, we saw in 2017, we saw a pullback on the transaction volume, which basically, again, reflects the fact that I think the hotel occupancies had been suffering, rents, the ADRs had been leveling out. We saw modest ADR growth in 2017, but this overarching concern, what's going to happen with 103 month sustained economy, and how many more months can this run until we dip into recession? The fears of recession in 2017, I think, caused a little bit of pullback. I think you're going to see the hotel industry and the players moving a little more cautiously into next year. There's been a lot of new construction as well, so we're starting to see in certain markets like Miami is a good example. Convention Center has been shut down the last year and a half in Miami Beach. The big players and the big owners in Miami Beach were facing a wall of new construction that was being delivered in 16 and 17. But now they're wading back in. They're starting to look and see where things are stabilizing. We have a very, very good hotel group that specializes in hotels around the U.S., Integra Hotels, headed up by Jeff Greenwald out in California, and James Andrews down in the Caribbean, and Julie Schultz handles the Southeast for us. What that group is tracking, we have a Caribbean feature on the hotel market as well. We're seeing a fair amount of construction there, but again, ADRs are slowing a bit. So fundamentally, I think there's been this concern about the economy, at least on the investment side. I think the users of hotels are feeling it too, right? I mean, business travel will probably be up this year, a result of some of the tax implications that we talked about, and reinvestment in people's businesses. But the leisure travel has been very uneven. We've had a very, international travel has been up in the air, but now the international markets are recovering, the global markets are recovering. So I think that's favorable going into 2018 in the markets that attract that type of clientele, right, in our major New York City and San Francisco.
Miami, yeah.
Yes, I think that's going to be a big positive in 2018. But I think domestic travel, it's been getting expensive. I mean, if you look at average ADRs in the urban markets, they're north of $300 a night. And at some point, you're pricing people out of the market, and so they turn to other areas. And I think it's one of the reasons, if you look at, we cover in each one of these segments kind of the bears and the bulls. Where was the biggest pop in transaction volume? And so the top three markets in this year's Viewpoint are Charlotte, South Florida, and New York City. But then you go down the list, and we list 10 of them, you see markets like Richmond and Birmingham and Memphis and Houston and Cleveland. So these are sort of more fundamental markets that are really servicing and forecasting domestic demand. Some business, some leisure, but they're not primarily leisure markets. I think what you're going to see is this year some of the leisure markets are going to slow. There's been a lot of full service development in the Caribbean, and that's going to force everybody to take a breath in 2018. And you're going to see some bigger plays.
Mm-hmm. What do you think about values moving forward for hotels?
I think a lot of the value creation in the hotels now is really about the concept, and it's about the management, and it's about the service, the personalized service that you provide. I think people are expecting more when they go to the hotels. They want an experience. It's kind of hotels hotels have always been an operational platform.
Oh, yeah.
Right? You've had to operate them right. And there's been external threats to that operational model. But one of the big things was always, how do you attract the customer? How do you capture that booking? And that has started to become now, as we've aggregated brands, and the brands now have figured out, okay, we understand how to capture our audience. Now the question is, how do we retain them and have them return?
Yeah.
And so we've gone from this sort of everybody went online and figured out that they could book a hotel room anywhere in the world. Now everybody's got that sort of figured out.
Right.
Now we're saying, okay, now you get there, what's your experience? What's your return rate? How do you get people to stay longer and want to come back?
Yeah.
And that's about creating the experience. And I think that's where the value creation is. I think the other thing is certainly in the boutique hotels, in many of the markets, the experience is about the dining too. So there's a component of having the right restaurant, having the right entertainment, and having the right introduction into the city so that when people come and stay at the hotel, they're immersed in, they're plugged in. People
Right.
want to be able to show up and get plugged in, and they're expecting the hotel to do that for them.
Right. What is the expectation for the shared economy impact on hospitality, the Airbnb type of thing?
So, it's interesting. Big splash. I mean, Airbnb is very well rewarded in the public markets today. They've grown very, very fast, but they're also facing a number of challenges that are holding back their what I'll call their core business, which originally was villas and private rentals. There's a lot of momentum politically to talk about land use. We're working on some things right now on the land use side to say, when does a house become a hotel?
Yeah.
Right? I can rent my house for a year. Normally, if I own fee simple title, I can rent my house for a year. Can I rent my house for 6 months? Probably. Can I rent it for a month? Maybe. But when I start renting it out per night, when do I go from a single family residence to a hotel?
Yeah.
When do I need to pay hotel taxes?
Right.
And you get into some of the urban markets like Miami, where we have condominium buildings, and people are starting to rent their condominium buildings by the week, by the weekend, getting huge premiums, to the point where the value as a rental starts to go up because Airbnb is sending you bookings, and you furnish the apartment, and you're getting 5x on the monthly rent in a weekend.
Yeah.
But is that a residential use at that point? So they're starting to face pressure at the local community level as to whether they're conforming to land use. But the bigger picture with Airbnb is they've become a real force in the lodging market generally for bookings, and the hotel companies are trying to match that prowess or buy some of it, buy other emerging companies that are competing. So that battle isn't over. Probably lasts another couple of years until a dominant winner is there. But I think Airbnb is going to continue to do very well in the leisure markets, in the leisure markets that are homes and villas and things of that nature. That's going to be their niche. I don't know how well they're going to compete when all the hotel operators put their money behind the technology and start to capture eyeballs. But they've got competitors too, so it'll work out.
While I have you here, Anthony, I want to ask you about your thoughts on the impact of rising interest rates on the single tenant net lease investment market. If you look at some of the single tenant net lease properties, drugstores and the like, they have flat leases that are the same rental rate for a long term. So the logical thinking is that if the cost of money goes up, that it would impact those property types. So what do you guys expect moving forward for valuations or cap rates on some of these single tenant net lease properties?
Sure. I think some of them are going to move up. I think certainly as the credit is reevaluated on some of these companies, that could also force a rate jump. But I'll tell you, a lot of what we see in the net lease market is really 1031 exchange plays, right? An owner is selling their former office building that they was management intense and they had to do repairs and so forth. They're taking that equity and they're rolling it over in a 1031 exchange.
Yeah.
So those tend to be low leverage transactions. And there wasn't much leverage, even at our low interest rates.
Yeah.
In a lot of these transactions, there wasn't much leverage already,
Right.
Positive leverage. The real key is to be sure you're in a position where you don't have too much debt going in that's going to be rolling in 2, 3, 4, 5 years on your level lease. That's going to be the risk on the net lease side, I see.
As interest rates rise.
As interest rates rise and you have to refinance.
And you got a flat lease.
And you've got a flat lease.
Yeah.
So we're looking at that. But I would think cap rates are going to come up a little bit, just like every market. Probably maybe even a little bit more than some of the markets that have, or some of the asset classes that have rent growth. But on level leases, you're going to start to see a pop in those cap rates for sure.
All right. So leave our audience here, Anthony, today. What would you leave them with regarding to the Viewpoint 2018? Kind of a last tip for them.
Sure. I'll tell everybody what my dad always said to me as a kid. don't panic until I say panic. Everything looks, all indications are good that we're going to have a pretty decent run in 2018. It's not going to be a breakout year. If we hit 2.5% GDP, we think things will continue. There are going to be some adjustments in the economy, certainly, that are going to favor some assets over the other. But don't panic. I think 2018 is going to be pretty solid.
I'm glad I'm not panicking.
Do not panic.
Mr. Real Estate, thank you for coming on.
Thank you, Michael Bull. Always fun.
Yeah, and
Appreciate
thank you
it.
for joining us out there. If you'd like more from Anthony, visit IRR.com for Integra Realty Resources and comment on the show. Let us know what you think. We appreciate you sharing and connecting with us. And until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show.